selling covered calls is a promising way to generate consistent income with just your phone on a couch. I sell calls all the time. Look, Chipotle call for $46, a Tesla call for $185. Let me tell you, it's addicting. Selling a regular call requires 100 shares. Selling an NVDA call will require 100 shares of NVIDIA, and that's 14K. Not everyone has 14K. For sure, he doesn't. Many people driving a beat up car from 2007 still wear shoes from years ago. Oh wait. That's me. At the same time, like everyone else on Wall Street bets, he's poor but he wants to get rich. So maybe there's an answer to this. A poor man's covered call, PMCC. Instead of paying 14Ks for 100 shares of NVIDIA, all you need is about 2K to buy an NVIDIA call so you can sell the call against that. And then you can sell weekly NVIDIA calls to collect the premium every single week. With PMCC, his get-rich-quick dream might just come true. And from what you saw on that PMCC, the execution is very simple. But there's actually a lot more to it. Is there a proper way to set up PMCC? How likely can you win? What is the maximum you can lose? Therefore, in the next 10-12 minutes or so, I'm going to use the most user-friendly language to cover all of the above. Grab your favorite drink and let's get into it. Good morning everyone, my name is Justin. I'm a designer working in Silicon Valley. In order to understand PMCC, you need to know three things. First, you should know how to sell a regular covered call. Two, you know what a call debit spread is. And three, you know what theta gain, theta farming means. If you don't, I have all the videos in the description. If you do, let's get right into chapter 1. How to properly set up a PMCC. PMCC is able to bypass those 100 shares because in its nature, it's essentially a spread. A typical option spread spreads across two strike prices expiring on the same day. However, PMCC is special because the two strike prices actually expire on two different dates. Because it's a spread, to get ready for PMCC, you need to make sure you're on level 3 option trading. You're on Robinhood, you can go to your profile, go to the menu, and then investing. Scroll down to the option trading section. If you don't have level 3, then you are not going to see the plus sign in the option trading UI. Now, since you have level 3, let's go into the nuances to see how you can set up PMCC properly. Because if you set it up wrong, even when the underlying stock goes up, your PMCC can still implode harder than a kitten. Luckily, a PMCC only has two components. You buy a call and then you sell a call. The call that you buy, we call it a long call. The call that you sell, we call it a short call. For a long call, there are two things to pay attention to. First is delta. Typically, you will buy a long call that has a delta between 70 to 90. In Robinhood, you will say 0.7 to 0.9, but because option trading trades in the unit of 100, so you times 100, which you will get 70 to 90. And these will be in the money calls. In the money calls are always better than out of the money calls because in the money is safer. It's safer because a 90 delta call is roughly equivalent to, by the end of the expiration date, this call will have a 90% chance being in the money. And when it's in the money, it guarantees that the value of this call is not going to be zero. The second thing to pay attention to for the long call is the expiration date. You want to have an about 90 days, so it's 3 months to a year until expiration. Each option has a time value and is decaying every single day. This curve tells you the more time you have in the option, the longer the expiration date is, the less time decay there is. So buying a long call with more days to expiration, the call itself holds the value better because it loses less time value in the early phase of the option lifetime. To put both delta and expiration date into perspective, the most ideal long call you can buy to set up your PMCC is high delta, further out. At the same time, it's super pricey, which kind of go against the whole point of being a poor man. And you don't want this either. So somewhere here is a good start, and that's for the long call. To set up the short call, we look at the same two things, delta and expiration date. Remember this curve, out of the money options only have time value. So as it gets closer to the expiration, time value drops like a waterfall. The total value of that out of the money option drop to zero. You don't want that for yourself, so you can sell it to all those geniuses on Wall Street bets. And they will take it and later go, out of the money options have a delta between 0 to 50. So selling call with delta about 10 to 30 can be a good starting point. As for expiration date, because you are selling out of the money options with only time value, that means we want that time value to go to 0 ASAP. And this part of the curve goes down pretty fast. So we want to sell those. The general consensus is to sell those calls expiring in about 1 week to 4 weeks. So now you know how to set up the long call, you know how to set up a short call to put them together. You can calculate something called the delta gap. If you have a long call with a 90 delta and a short call with negative 10 delta, you can ignore the negative sign here. The gap will be 80. If it's a 80 and 20, then it will be 60. If it's a 70 and 30, the gap will be 40. The wider the gap, the safer your PMCC is, meaning the chance of winning is higher. And we will get into that in the next chapter. From my research, a delta gap of 40 to 50 is somewhat a safe, good starting point. So let's go back to the NVDA PMCC we tried to set up in the beginning. We were buying a 132 strike call expiring February next year, so that's 3 months out from today. And we are selling a 152.5 strike call expiring in 1 week, which gives us a 50 delta gap. But that sounds great. It looks pretty straightforward. We're gonna get rich. Not so fast. We need to look at all the win and loss scenarios, which leads us to chapter 3. With the same NVIDIA PMCC example, here are all the win and loss scenarios. Let's start with the positive. If NVIDIA goes up steadily to exactly 152.5, the same strike as the short call. Because they're the same price, it costs $0 to buy back that short call, and you already made $120 gain from the beginning by selling that call, which means you have a max gain of 120. And because NVIDIA goes from 145 to 152.5, about $7.50, the long call that you have with a 70 delta will give you about 525-ish profit. So your net in this scenario will give you about a $650 profit. If NVIDIA only goes up steadily for $5 to go to 150, because 150 is lower than the strike price of the short call, 152.5. That means you're going to keep all your premium. For the long call, NVIDIA stock goes up $5. So 5 times the 70 delta, which is $350 in value for the long call, approximately. So if you sum them up, it will be about $470. If NVIDIA goes flat, again in this case, you're going to keep all your premium because the 145 price is lower than that strike price of the short call. For the long call, because it's flat, it's not going to gain any value, and instead theta is going to eat up some value of that long call. And the theta of this long call is about $8 every day and 5 days in a week, so you lose about $40. But still, because the short call premium is so much higher, you're still going to make some gain in the end. So those are the 3 main scenarios that you make money. Now we can look at the 2 scenarios that you actually lose money. If NVIDIA drops from 145 to 130, even though you will still keep the maximum gain for the short call, for the long call you actually lose money because NVIDIA drops about $15 in price. 15 times the 70 delta give you a loss about $10.50. Net for your PMCC will be negative $930. But that's not the only way you can lose money. If somehow NVIDIA proven to be so indestructible, the earnings through the roof, and the stock price goes to the moon to 182.5, your short call actually loses money because when the stock price is so high, this short call becomes in the money because the 152.5 strike is now lower than the NVIDIA stock price of 182.5. It's in it. So when your short call is in the money, the delta is no longer negative 20, it's now negative 100 because now it's $30 in the money, and 30 times negative 100 delta will incur a $3,000 loss. But because you collected the 120 premiums in beginning, so for the short call portion you lose about $28.80. For the long call, NVIDIA goes up about $37.5. That time, the 70 delta gives you about $26.25 gain. So the net, you still lose. You lose about $255. Since we are selling a weekly call, this is going to illustrate what could happen by the end of this week. The max you can lose in this case is somewhat around 2K because you will still collect premiums here and there. It's going to cover some of the losses. 2022 is a prime example. NVIDIA is down 60%. So even if you have a 70 delta call set up, it's going to expire out of the money and your long call will get wiped out. So PMCC is a bullish strategy. PMCC wins when the underlying stock goes up a little bit steadily but not aggressively. If you sell weekly calls, then every week you're going to go through this same cycle having these 5 possible scenarios. With this NVIDIA PMCC, we have done the right setup for the long call, the short call, we know the win and loss scenario. So how would it play out exactly? Well, we can see how it played out before in 2021 from January to June. So I will buy a 70 delta long call expiring in 6 months. That costs about 8K. And then I did all the simulation run through every single week. And in the result, you will see you win some, you lose some. So whenever my short call expired in the money, I rolled up that call to a higher strike price further out so that the new premium from that call can cover the current price of closing this call. And in the end, it's a net win. It's about 40% in 6 months, and that's absolutely amazing. I certainly can't tell the future, but I hope my PMCCs are as amazing as that one. I have a Chipotle PMCC that cost me $900. I have an Airbnb PMCC that cost me 2.2K. I have a Nike PMCC that cost me $670. The delta is a little low, it's 51, but it's okay because why would the stock still go down if it keeps beating earnings? With a proper setup, the knowledge of the win and loss scenarios, sprinkled with some luck and hope, this poor man might be able to PMCC his way up the social ladder. Well, if he could move up the ladder, give me 1 second. I will see you all in these videos. Tschüss.